Hello and welcome. You're watching Your Trades with me, Snehisha, and with me is Priyanka, and you're watching ET Now. Well, let me take you through the market action we saw today, and well, not much of an action to begin with because we did have a rather tepid Tuesday on D Street today. Nifty, however, managed to hold on to those 22,350 levels, but still closed with a downtick of 0.2%. Sensex also down 0.2% on close. Nifty Bank, however, the outperformer when it comes to both of these other indices, up 0.2% in trade. And even when we look at the broader markets have managed to underperform Nifty once again. The mid cap index down 0.2%, but it was the small cap index that saw yet another day of deep cuts in the red. 1.2% downtick coming in for Nifty small cap index as well. When you look at it sectorally, then well, you have a mixed bag when it comes to some sectoral action as well, because you have PSU banks down up 2.5% in the green, followed by auto, energy, pharma, realty and infra. All of these sectors in the green, but barring these sectors, you had the likes of metals, finance, FMCG, media and IT closing in the red. IT was the one that took it on the chin today, down 1.6% in trade. And even when you look at the broader market, some stocks did stand out for us, the likes of Westlife Food World on the notification coming in from the FSSAI certifying the cheese to be 100% real. That was up 8%. You also had that exclusive story coming out of my colleague who reported this, Sumit Samvardhana Madhusan, that stake sale to be happening tomorrow. So that stock was in focus as well. But Priyanka, Tata, that group of stocks also in focus on the back of that auto demerger. So tell us more about it.
Yes, absolutely, Snehi. In fact, when we opened, the top gainer was Tata Motors. We did shed some gains later in the day, but then the big story was clearly the demerger trigger. The CV business will be demerged from the PV business, which also includes EV plus JLR business. And we did have some brokerage notes also on the same, where Macquarie clearly says that the pure plays to drive better value discovery, and hence this move. As well as there was one more report from JP Morgan who revised the bull case scenario and in fact upgraded the stock to 1200 levels also. So this was Tata Motors in the trade, the top gainer. And the second important stock which was in the news, IIFL Finance stock was down 20%. RBI directed to stop the gold loans operations, and gold loans, of course, let's not forget that that constitutes a very big portfolio for IIFL Finance, nearly 30%. In fact, you did a detailed research also, Snehi, the whole day. And Jefferies also did come up with a note here that if the ban prolongs here for about 9 months, the EBITDA impact will be about 25 to 30%. That clearly did had a hangover on the stock. But then, yes, beneficiary were the other gold companies, clearly the Muthoot Finance and Manappuram Finance. And we did saw some upgrades. Investec also upgraded Muthoot Finance also. This was one of the second stock which was buzzing throughout the day. Third stock which to be watched out in amongst the top five gainers was Bajaj Auto. Buyback opens tomorrow, and the buyback closing date would be March 13th. Its buyback price is around about 10,000, which is 22% to the February 28 closing as well. So this is on the front of important stocks, but let's understand what are technical analysts reading from the markets at right now. Kunal Bothra joins in to make us understand that what are the current levels indices needs to be looked at. Kunal, a little jittery we saw. In fact, yesterday only we did saw some gains were eroding, but we managed to close 2200, 400. But we could see that there was some maximum open interest which we could see at 22,400 straddle, which was an indication that there can be some consolidation. Is this consolidation looking like it'll have more legs, or was this just a trade before expiry?
So good afternoon. Yeah, I think it's more of an expiry trade because I would probably believe that there are many other parameters which are changing to be a bit more positive for the indices. The India VIX falling off from 16 levels to almost 14.35 where we've closed today. So that clearly is an indication that the risk on sentiment is coming back. Volatility subsiding is always a positive, is generally considered to be a positive for the markets, and that generally could be a precursor that we may be inching towards a breakout pretty soon. The other part is also very interesting. The premium for both the Nifty and the Bank Nifty, moving up hard. So for the Bank Nifty, I think the premium was around 250 to 60 points. That the fag end of the trading session today jumped to almost 320-25 points for the Bank Nifty. So that surge in premium and the Bank Nifty inching towards that 48,000 mark on the spot levels in terms of a breakout, I think all of that augurs quite well for the overall market. So my expectation is that maybe over the next couple of days we may see a mild bit of consolidation, but the factors in the market internals are changing to be a lot more positive, and I believe that eventually we should break out on the upside.
All right, mild bit of consolidation, but eventually, Kunal, you're spotting a breakout. So, amid a market setup like this, what are your picks and what are you recommending for our viewers?
So I'm betting on financials over here. So two buy calls over there. AB Capital is the first stock which I've been very bullish on. So would continue to suggest a buy on the stock. My expectation is that if this flag pattern breakout gets completed for the stock price, we may be looking at a breach of 200 levels for AB Capital over the near term. That should be that should take the stock back towards its previous major swing highs. So 205 is the target. Stop loss could be kept at 185. And the second stock which I'll be very bullish on from a very near-term play would be on PNB. That's a stock which is completing a bullish pennant formation. Closer to 128.29 is where the stock closed today. So buy with a target of 135, stop loss at 126.
Very interesting. In fact, AB Capital, we did speak to Vikas Khemani today. He also happened to mention about this stock. Thanks very much, Kunal. But that was a long-term vision which he has for the long-term investment. That's a long-term bet in his portfolio, what he mentioned about. Vikas Khemani, founder, Carnelian Asset Management, believes that domestic pharma space is performing well and that we are in the middle of a bull run in the pharma space. Let's listen to what all did he mention.
Pharma is, if you see, if you say last 1 year, before that, almost 7, 8 years, there was hardly any return, especially led by a lot of overhang in the US markets. We have seen over last 1 year that getting lifted, pricing scenarios improving. Of course, India has leading market share in the global medical generic space, which is now with pricing pressure going away, doing very well. Domestic pharma, no doubt, was doing well, continues to do well. So if you look at combination of these two things, I think we will see a good structural sort of growth in pharma as a space for next 4 or 5 years. And, valuations are not as demanding. Of course, recently some run-up has happened, but still, I feel valuations are not very demanding. Compare it to, let's say, consumer play. Pharma and consumer profiles are not very different, but valuations were in consumer far more demanding than pharma. So I feel that and it was under own sector. So all these things are changing slowly, and as they are changing, you see sectors doing very well. So I see we are in a middle of a very big bull run in the entire pharma pack. A lot of API companies are going to do well. Likewise, again, domestic pharma, company which so what recently we have kind of picked up in companies where domestic pharma business is good, but US is seeing turnaround. So the delta on the returns would be far higher. So ideally, you want a combination of business which is good domestic business growing at a steady pace and turnaround coming from US business. Those are the kind of pharma and generic space we like. But we also have bought companies like Syngene, which are in CDMO, Newland.
All right, viewers, that's the word coming in from Vikas Khemani of Carnelian Asset Managers. With that, we'll slip into a very short break on this edition of Your Trades. We'll be right back with more news and updates, so you stay tuned. Hi there, welcome back and thanks for still staying logged into Your Trades. You're watching ET Now. Let's take a look at the derivative setup for today, and that's on the back of the 7th March expiry. That's right ahead of us. When you look at Nifty, we did see some long unwinding coming over there. There's a slight bit of a pressure coming in on Nifty today. However, on the other side, we did see long build up on Bank Nifty. Remember, Nifty Bank did much better when you compare it with the Nifty and the Sensex today. So that's a key positive coming in. And looking at India Weeks today, India Weeks was at 14.4%, and that's a 3.6% fall coming in for India VIX today as well. And let's take a look at the active calls and active put levels for the 7th March expiry. And when we look at the active call levels, we did see call writing at 22,400 and 22,500, making 22,500 the next resistance level to watch out for. And on the put side, then when you look at active puts, you did have 22,300 and 22,200 where put writing was seen, which makes 22,300 the next support level to watch out for. So 22,500 on the upside, 22,300 on the downside are the levels that you should be watching out for Nifty.
All right, well, that's on the derivative side, but let's take you more on the big story of the day, which certainly happens to be IIFL Finance. And because IIFL Group, as there are some regulatory concerns, but then my colleague Ankur, who will help us take stock of the regulatory concerns brewing in the IIFL Group over the years.
Yes, definitely. This is not the first time that IIFL Group has been under regulatory radar. Now, let us start from 2022 when SEBI has banned former IIFL dealer for a period of 5 years, and the charges were front running. Now, what was the allegation? The allegations was that there were front running trades which were conducted by the alleged dealer, and the information was passed to a friend who was working in another company. So all in all, SEBI came up with the order. There was a ban of 5 years to of total 6% from the group. Apart from that, in June 2023, you would remember that on IIFL securities, there was a ban from the regulator, that is SEBI, and this was done because they had not been following the broker regulations as per the regulator. However, if you see a year later, meaning in end of December 2023, SAT had revoked that ban, but the penalty was still sustained and it was reduced to rupees 20 lakhs. And finally, in March 2024, that is yesterday, there was a ban which came on IIFL Finance, that was for gold loans and for onboarding new customers.
Alright, well, Ankur, thanks for giving us the background on this. But what's key to note is IIFL Finance Management also held a con call in the morning today to allay all investor concerns. And here are the key takeaways from that call. Now, they said that out of the 18.9 lakh disbursements that they've done, only 82,000 of them have gone for auction. And RBI is considering only these 82,000 cases, and that's where the problem is arising, and they need to be looking at the bigger picture. Now, they say that there is no case of LTV breach on a branch level, and operations are running normally. They're seeing no impact on their operations as well and on the loans assigned. They're saying that when it comes to disbursals and collecting cash, the company is doing so at a limit of 2 lakh rupees. However, the RBI's directive is to do this only by with the limit of 20,000 rupees. So now they're going to stick to this directive that has come in. They're saying that they have adequate liquidity at the group level. They see no challenge over there, and they will be submitting a report to RBI with the corrected actions, maybe today or in a day or two. But yes, these are the key highlights coming in from the IIFL investor call in the morning today.
Definitely, we'll see that how this entire story pans out. But then let's talk more on the second big story, which happens to be Tata Motors. The board of Tata Motors has approved the demerger of its combined portfolio of businesses into two separate listed companies. One CV focused and the other one would be PV focused. Tata Group Chairman N. Chandrasekaran shared how the demerger will help the companies capitalize more opportunities. My colleague Srishti Sharma joins in with more details.
Well, yes, Tata Motors is in focus as the company has announced the demerger of their businesses into two separate listed entities. One will be the commercial vehicle arm, which contributes around 22% in the overall top line of the company, and the other one will be the passenger vehicle division, which will house in the JLR, India passenger vehicle, as well as the EV division of the company. Now, talking about this process, then the company has said that this will take another 12 to 15 months to complete the whole process, but all shareholders will have identical shareholding in both the listed entities. Now, if we see the divisions of Tata Motors, so since 2021, the company has highlighted that all of these businesses were operating independently under the respective CEOs, and the brokerages have also highlighted the same, that given the different divisions, they were anyway valuing the different divisions on the SOTP valuation individually, and with this particular announcement, though it is sentimentally positive, nothing will change with the valuation approach, and the majority of the shareholders, majority of the brokers rather, have actually gone ahead and maintained their rating as well as target price on Tata Motors for now, though they are highlighting that this whole announcement, this should be able to pursue their respective strategies with respect to the different divisions. Now, the different divisions will have greater freedom. This will get some clarity on the future capital allocation policy as well, and the CV business in the future can see more re-rating driven in the improving market share. And some brokerages have also highlighted that the valuation gap between Tata Motors passenger vehicle division as well as Maruti could shrink further. So that's the news coming in from Tata Motors. As of now, brokerages see is at sentimentally positive.
Alright, Shrishti, thanks so much for taking us through that. Now, we did speak about a lot of buzzers in today's trading session, but Gaurav is joining in with all the other stocks that were also a buzz today. Gaurav, take us through the list.
Well, yes. Aavas Financials is our company which will be in focus today because the stock was down 5%. Now, because 12% of the equity changed hands via a bunch of trades. And with this, the stock has come down to a levels where it was 5 years ago, whereas the AUM growth has remained strong at 22% CAGR basis for the last 5 years. And that is why this stock is definitely going to be in focus for the next few days. Let's also keep an eye on Westlife Food Worlds, the brand we know as McDonald's, because the company, there was an article which questioned the content of cheese and cheese products as a part of the composition. And now the company has clarified that FSSAI has now verified that the cheese used by McDonald's is 100% real. And on back of this, we saw the stock was trading up almost 7% in today's trade. Let's also keep an eye on Muthoot Finance because now Investec upgraded the rating for the company to buy rating and also increased the target price to 1550 rupees. This move is coming because the IIFL's restrictions led by RBI on the gold loan segment. Now Investec believes that Muthoot Finance is going to be a largest beneficiary from this move because they are going to gain the market share which IIFL may lose in the coming days. And given that the Muthoot is already a largest and most efficient player in the NBFC segment, specifically in the gold loans, this is going to benefit the company. Let's also keep an eye on Bajaj Autos because the company is now going to buy back shares. The buyback will start tomorrow and the end date is on 13th March. And the buyback price is set at 10,000 rupees, which is at a 20% premium to current price. And the buyback size is going to be for 4,000 crore rupees. And that is why we saw the stock was also trading in green today. And lastly, let's also keep an eye on Adani Power because now company has now received a letter of intent to acquire the company Lanco Amarkant Power Limited, which was going through insolvency process. The company already has 660 megawatts of thermal power in Chandigarh. And on back of this, we already saw that Adani Power was also trading in green today. So from here on also, let's keep an eye on all these companies.
Thanks very much, Gaurav, for compiling all the stocks which were buzzing other than the top stocks. Thanks very much. Well, that's all in this edition of Your Trades. Thanks so much for watching. Stay tuned to ET Now for more updates.